Yeah, look, I was saying that the sell-off's going to begin last week. It's going to continue for a couple weeks. And that I was kind of using a Tolstoyan analysis, which is that all bull markets are happy, but each bear market is unhappy in its own way. I mean, this one we suddenly decided that this project, this problem, this $300 billion debt is an issue. It has been an issue for months. But we always felt that the PRC, the government, would bail them out. And, David, what this seems to be is a recognition that when the nation's richest man, which is the person who owned Evergrande, is in trouble, we no longer expect the Chinese Communist government to bail them out.
Yeah, I mean, it's part of what has been happening there in the last, I don't know what you call it, 6 months to a year, over a year now,
yes,
actually.
Yes, that's why it's a slow-motion train wreck, but it's been going.
Because it's not as though we haven't talked about an overheated property market in China for many years. And, I mean, there have been so many times that we have perhaps set up, this default or could be the key one, or this could really undermine the entire financial system. I mean, it's not hyperbole. You've heard that many times through the years, and, of course, it doesn't happen. The Chinese figure out a way. Somehow the banks continue on. And those who saw financial Armageddon have been wrong. But here we are again with an enormous property company that has enormous amounts of debts that basically is trying to actually make good on debts by giving people and or vendors, empty apartments that aren't even finished.
Yeah, you're allowed to get
that's kind of where they are
parking
now.
spots. Carl, one thing I want to point out is we sit here and we talk about how the United States is not allowed into China. We're not allowed to make loans in China. We're not allowed to be part of China. Oh, but when China goes bad, suddenly we're involved with China? I am sorry. Look, we know we have to deal with 3 or 4 days of people who don't know what they're talking about coming on and talking about contagion. All I can tell you is we wish we had contagion. We're not allowed in. Our banks are the safest banks in the world because we have just been told by China forever, good luck, you're not coming in. So I can sit here and watch all our banks go down, Carl. But you know what? I am going to say this is the silver lining, the playbook silver lining, although the Eagles look terrible, of what I regard as being, it's the other side of, hey, you're not allowed in. They need us so badly, but we're not going to play because there's no reason to.
Yeah. I hear you talking about the relative safety of U.S. versus China, Jim, but how do you fold in the Evergrande concerns with general stagflationary concerns, what this does to the Fed meeting this week, obviously the dance that we're witnessing between Manchin and the White House and the House?
Look, all of that is negative, but so is the debt ceiling. I mean, we actually have, when you have people like Janet Yellen saying this could be catastrophic, you start thinking about the S&P being downgraded. That caused a 19% sell-off 10 years ago. I look at this moment as being faux perilous. I say faux because everything could be contained by oh, David's going to hate this, responsible politicians. If you think that they're responsible politicians, and we don't necessarily need a multi-trillion-dollar bill to hire people since we can't find anybody to work anyway, then you know what? We have to suffer through this period, David, where we can't get anybody to work. Hopefully that they don't create even more jobs that we can't find anybody to work. And then we deal with it. But we have to go through it first.
Jim, it feels like we've had more showdowns over the debt limit than even worries about the property market in China.
80 in the last couple decades.
But at the same time, if it actually were not to happen, it would be, do you not believe, a significant moment that would potentially be a very bad one for the financial market?
Yes, and that could cause a bottom. I hate to say what could cause a bottom, but since I've been negative for so long, I'm not looking for a rally. I'm staying negative, and then we'll see. There'll be cues. I mean, Carl, look, we come in this morning, and suddenly this thing that has been this looming crisis all over the globe, with the exception of the United States, because we're much more hostage to whether the Fed's going to raise rates. And suddenly people are like frantically discussing, what is this Evergrande? What do they do? Oh, they own 1.5 million apartments. Oh, the apartments are empty. They've asked the employees to pay. I mean, this thing's been going on forever, but it hasn't been part of our lexicon because we're so busy talking about how the Chinese are saying to us, stay out of our markets. So, look, I think that this isn't as negative as the idea of the debt ceiling. Once again, Senator Manchin this weekend, but now some other moderates are saying, you know what, maybe we shouldn't have a big infrastructure. And that's causing some of our infrastructure stocks to trade down. But look, the narrative is negative. Maybe we have to be saved by earnings. But this is a moment, a 20-day period that started last Wednesday, that is historically the worst period for 20 years. So we should not suddenly wake up and say, you know what? It is time to buy AMC Entertainment.